we've understood individually how to calculate cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. Now we will be solving a full-fledged sum on which all the activities are given together, and we are required to solve the whole sum using the format given under Accounting Standard 3. Let's read the question. From the following financial statement of Zishan Limited, prepare the cash flow statement. Cash flow statement as per Accounting Standard 3. The balance sheet of the company is given to you and it is as per Schedule 3 format. Let's read it. Equity and liabilities, and it will always be given for two financial year. One is the previous year, other one is the current year for which you are preparing the cash flow statement. So the heading will be cash flow statement as on 31st March 2017. Okay. What else given? Equity and liability. Under that we have first head known as shareholders fund, under which we have share capital and reserve and surplus. For it we are given the note number. Okay, so we can't just make a judgment seeing this number that this is the final numbers. There are some kind of adjustment in this number, so we need to go and check the notes to the accounts given for this particular tab. So if we see notes to the account for the share capital, we see shares are of two kinds. Like I have told you earlier also, share are of two kinds. One is equity share capital, other one is preference share capital. Equity share capitals are the owners of the company. So equity share capital from 3 lakh, it has reduced to 2 lakhs. No. See, we need to read it in a way from previous year to current year, right? This is my opening. 2016 will be my opening year and 2017 is going to be my closing year. So the arrow won't be in this direction, it will be from right to left. So from 2 lakh it has increased to 3 lakhs. What does this mean? It means we have issued the share capital. Which share capital? Equity share capital in the market. So this is which kind of activity? This is financing activity. Is it an inflow or outflow? So when you issue the shares in the market, what you receive from them? We receive cash. So there is cash inflow, right? So the increase of 1 lakh is cash inflow from financing activity. Then again you see equity. After that we have preference share capital. In that also we have observed that from 80,000 my balance has increased to 1,40,000. This means what? Again it is a financing activity, and since it is getting increased, this is cash inflow from the financing activity. Okay, let's see ahead what else is given in our balance sheet. Reserves and surplus, and again the note number 2 is given. So we can't make a judgment, we have to check what is given under note number 2. Note number 2, reserves and surplus. In the heading they are writing surplus in the statement of profit and loss at the beginning of the year. This is my opening profit and loss balance. Okay, profit and loss balance of last year. What profit I have earned in the previous financial year. Then we add the profit which we have earned in the current financial year. Dividends are given and you finally get the profit to be shown in your balance sheet. Okay. So why this data is given? This data is given for purpose of knowing our operating activity cash flow. The starting point of our operating activity is what? Net profit before taxes and extraordinary item. Since there is no profit and loss statement given, we have to use the numbers given in our statement of balance sheet. So if we see, we are given opening numbers, closing number. How do I get the number which I need to take it to the cash flow statement? So for that, we will be doing is closing profit and loss balance. We will be deducting it from opening. Okay, so what is my firstly opening balance and closing balance? Current year is this, so this is my closing profit and loss, and beginning means opening profit and loss, right? Okay, Then dividend is given. Why this dividend is given? We have paid the dividend this year. Is it a scene that we every year pay the dividend? It is not the thing. We don't every year pay the dividend. It depends on the profitability and declaration made by the director. And not just the declaration made by the director, it is also the approval of shareholders. And if we see dividend is paid, it is not a normal activity, it is an extraordinary item. Okay, so this is my extraordinary item, one thing. Other thing, if it is given in the additional information, this dividend paid will be treated as what? When you pay dividend, we pay dividend when we issue the shares, right? On to the shareholders, dividends are paid. And paying the dividend is nothing but your financing activity. Is it your cash inflow or cash outflow? Obviously, when you're paying money, there is a cash outflow. So this dividend payment is nothing but your cash outflow from financing activity. Okay, so the first part of the balance sheet we have understood is shareholders fund, in which share capital and reserves and surplus was given. Second part of the liability side is the current liability. Okay, so for that purpose we check, first thing is the trade payables given. Trade payables are your creditors plus your bills payable. Okay, so where do we use this? We use this in our cash flow statement in our operating activity part, that is for knowing operating profit after working capital changes. In it I have told you, if there is increase in current liability we will add it, if there is decrease in current liability we will deduct it. If you will see, my current liability is getting decrease, so if it is getting decrease I will deduct it. Okay, and in which activity? Operating activity. Now short term provisions, for this they have given in the bracket that it is for provision for taxes. Okay, so what is provision for taxes? Every year a company needs to pay some kind of tax on the profitability, but till the books are prepared, your balance sheet is prepared, you don't get to know what is your profit or what is your loss. So the company needs to have some kind of amount set aside for payment of taxes. That is nothing but provision for taxes. Okay, so if you will see, in the opening year I have 12,000 as provision for taxes, and closing it is 4,000. Okay, so as I told you, paying taxes is one of my operating activity. So whenever you pay taxes, you need to treat it as cash outflow from the operating activity.